Mr. Buffett, how can I make $30 billion?
Start young. Charlie's always said that the big thing about it is we started building this little snowball on top of a very long hill. So we started at a very early age in rolling the snowball down. And of course, the snowball, the nature of compound interest is it behaves like a snowball, of sticky snow. And the trick is to have a very long hill, which means either starting very young or living to be very old. I would do it exactly the same way if I were doing it in the investment world. I mean, if I were getting out of school today and I had $10,000 to invest, I'd start with the A's. I would start going right through companies, and I probably would focus on smaller companies because I would be working with smaller sums, and there's more chance that something is overlooked in that arena. And as Charlie has said earlier, it won't be like doing that in 1951 when you could leaf through and find all kinds of things that just leapt off the page at you. But that's the only way to do it. I mean, you have to buy businesses. Or little pieces of businesses called stocks, and you have to buy them at attractive prices, and you have to buy into good businesses. And that advice will be the same 100 years from now in terms of investing. That's what it's all about. And you can't expect anybody else to do it for you. I mean, people will not tell you about wonderful little investments. It's not the way the investment business is set up. When I first visited Geico in January of 1951, I went back to Columbia, and that rest of that year, I subsequently went down to Blythe and Company, and actually to one other firm that was a leading, Geyer and Company, that was a leading analyst in insurance. And I thought I'd discovered this wonderful thing, and I'd see what these great investment houses that specialized in insurance stocks said, and they said I didn't know what I was talking about. They wasn't of any interest to them. You've got to follow your own. You've got to learn what you know and what you don't know, and within the arena, what you know, you have to pursue it very vigorously and act on it when you find it. You can't look around for people to agree with you. You can't look around for people to even know what you're talking about. You have to think for yourself. And if you do, you'll find things. We'll start. I have here in New York Times on March 12th, 1942. It was just about 3 months since we got involved in a war which we were losing at that point. The newspaper headlines were filled with bad news from the Pacific. So anyway, on March 10th, when again the news was bad, foe clearing path to Australia, and it was like the stock market had been reflecting this, and I'd been watching a stock called City Service preferred stock, which had sold at $84 the previous year. It had sold at $55 the year before, early in January, 2 months earlier, and now it was down to $40 on March 10th. So that night, despite these headlines, I said to my dad, I think I'd like to pull the trigger, and I'd like you to buy me three shares of City Service Preferred the next day. And that was all I had. I mean, that was my capital accumulated over the previous 5 years or thereabouts. And so my dad the next morning bought 3 shares. So I paid the high for the day. That 38 and a quarter was my tick, which is the high for the day. And by the end of the day, it was down to 37, which was really kind of characteristic of my timing in stocks that was going to appear in future years. You'll see that The stock did rather well. You can see where I bought it, 38 and a quarter. And then the stock went on actually to eventually be called by the city service company for over $200 a share. But this is not a happy story, because if you go to the next page, you will see that well, as they always say, it seemed like a good idea at the time. So I sold it. I made $5 on it. It was again typical of the behavior. But when you watch it go down to 27, it looked pretty good to get that profit. Well, what's the point of all this? Well, we can leave behind the city service story, and I would like you to again imagine yourself back on March 11th, 1942. And as I say, things were looking bad in the European theater as well as what was going on in the Pacific. But everybody in this country knew America was going to win the war. I could imagine that at that time you had invested $10,000. And you put that money in an index fund. Let's say instead you decided to put the $10,000 in and hold a piece of American business and never look at another stock quote, never listen to another person give you advice or anything of the sort. I want you to think how much money you might have now. You'd have $51 million, and you wouldn't have had to do anything. You wouldn't have to understand accounting. You wouldn't have to look at your quotations every day like I did that first day. I'd already lost $3.75 by the time I came home from school. All you had to do was figure that America was going to do well over time, that we would overcome the current difficulties, and that if America did well, American business would do well. You didn't have to pick out winning stocks. You didn't have to pick out a winning time or anything.